Hey guys, we have another big week coming up ahead in the markets. So I just wanted to make this video going through some of the biggest companies and most important earnings throughout the week, and then hone in on what companies I own that are reporting this week and what other companies that are reporting this week am I going to be keeping a close eye on, what I'm hoping to see out of each of these companies, and what I really think will help their stocks move one way or another as we go through this week. Let me know in the comments if you guys are looking at any of these companies' earnings throughout the week. Would love to understand what companies you guys are invested in and interested in as well. But we'll get into it. Just one last plug. If you haven't subscribed to the channel, please do so. Click in the bottom right corner on the subscribe button. We're a small channel, but we're growing quick, up to 66 subscribers. So let's keep the train going closer to 100. I really appreciate everyone who does subscribe and interact with the channel. It really does really does mean a lot to me and pushes me to make more videos, make more content, and interact with you guys even more. So let's get into it. On the Monday, there's a couple interesting companies reporting. We got Simon Properties, Spirit, Pinterest. Pinterest will be interesting after what happened with Google, Snap, Meta reporting pretty weak numbers in terms of advertising revenue year over year. So I'm going to just peek in on that one. But the one company for my portfolio that I'm interested in is Activision Blizzard. I don't own Activision Blizzard directly, but I do own Microsoft shares who agreed to buy them out. And that deal is supposed to close this year. So I believe what's interesting is the buy price was in the 90s. So that doesn't bode well for market confidence on the deal closing 100% at least. So that's one interesting thing I want to keep an eye on. Anything that they talk about that has to do with the acquisition and confidence in the acquisition closing will be interesting for me. But the other thing here is Microsoft bought Activision before the sell-off in tech and gaming stocks. So realistically, the buy price is overpriced. And I just want to check in to see, like, hey, is this deal even something that I want to go through as a Microsoft investor? If Activision's numbers are down and they're losing market share and stuff, and I'm buying it at an overpriced valuation to begin with, then maybe I'm like indifferent if it goes through. So just hoping that their business continues to perform well, continues to grow revenue, earnings, just to make me feel a bit better about the price that I'd be paying for the acquisition if it did go through this year. So that's one I will be taking a close look at. Going on to Tuesday, once again, not too much I'm overly interested in. Royal Caribbean Cruise Line, that could be interesting for some people. But other than that, the one that I'm going to be at least looking over their top line news or top line results will be Chipotle. So I don't own Chipotle, but I do own a number of quick service restaurants, both through royalty funds that I own, as well as McDonald's and Restaurant Brands International. And I just like to get a sense of the space, how other companies are doing in the space. You know, Chipotle overall has done well year to date, done well past 1 year, as lots of quick service restaurants have done. But they trade at a really rich valuation. The stock's done really well over the long term. So congrats to any long-term, wow, even better than I thought, any long-term Chipotle shareholders. I just have enough exposure to the space. They don't pay a dividend. So not exactly a business that I'm going to be investing in, but I think it's important to understand ahead of Restaurant Brand International earnings, after McDonald's earnings, just to see where my businesses fare relative to some other top performing QSR companies. And then Wednesday is probably the biggest day that I have the most things I'm interested in. Starting off with Walt Disney. Disney is a pretty big position for me. I think 5-ish% of my overall portfolio. So we'll talk about that one at the chart. A couple of the other ones before going over to the charts. Wendy's, Yum, Robinhood. Those are all ones for one reason or another I'm somewhat interested in. Uber as well, I find an interesting business, mostly as a consumer of their product. Just understanding how they're developing their business, and I know they have a a big push to profitability right now. So we'll talk that in a minute. But first, I'll go with Disney here. Disney is a company that I think over the last like 7 years is, yeah, over the last 7.5 years is flat. So this is a business that has unbelievable IP, has grown their business in different ways, but because of how expensive streaming has gotten and the secular decline of their cable business, the market's valuing them at the same price. There's also the overvalued Fox acquisition that they made that's diluting, value per share, since it was lots of dilution that happened with that deal. But nonetheless, those were still decisions made by the business, and the company's flat over the last 7 years. Over the year to date, it's up 25%, which is a crazy move for 1 month, but still in the past 1 year, down 22%. So the stock was down 50% last year, clawed back a lot last month, and we'll see how this earnings goes. But I think what they really need to show is, first and foremost, confidence on the streaming side of the business to continue to grow and have a glide path to profitability, hopefully next year in 2024. But I think even more so in 2023, starting to show glide path by the end of the year to this not burning billions and billions and billions of dollars. It's one thing to run a business, invest a lot in a business, and for it to not make any money. It's another thing to literally be burning billions and billions of cash flow. So I think there's going to be a big swing in the stock either way, depending on how they talk their streaming business endeavors, forecasts for 2023 and beyond. And that's really what I'm primarily going to be focused on when Disney talks. I'll also be interested if they mention anything about Hulu. They have that weird deal with Comcast on the rights to buy Hulu, but they really don't have the money to do it. And I don't think they want to dilute shareholders at these valuations or take on more debt because their balance sheet's not in a good spot. So any commentary around their plans on Hulu? I know there's been some comments on whether they should spin off ESPN. Any big, meaty strategic plans like that would be really interested to hear. And just anything else from Bob Iger in terms of what his strategy is the next couple years as CEO and what he plans to do and deliver. That maybe outside of these topics will be interested to hear as well. So I'll definitely be tuning into the earnings call for Disney and seeing how all that goes. On Uber. So Uber is another interesting company. Obviously, they have their rides business. They have their eats business. Their CEO's really pushing cash flow and trying to get to positive free cash flow across all of their segments. And this is a business that I'm not too excited about as an investor, just because I think they operate in some very competitive, more so on the food side or eat side, very competitive market landscapes with lots of competitors, and just a really tough dynamic of getting people to pay a lot more to get stuff delivered to them, especially with urbanization and stuff like that. People are closer and closer to getting these things themselves. So I just don't know how much runway they have in a non-promotional environment in driving those businesses. But nonetheless, interested to see how their numbers come out, more honestly as a consumer, as an investor. But I do find it to be an interesting company. Wendy's and Yum. So Wendy's obviously owns Wendy's, smaller company under $5 billion, mostly US. They do play in Canada as well. Wow, I didn't know they had that kind of dividend yield. But very similar businesses like McDonald's in the sense that they collect royalties from franchisees, and that's how they build their business without the real estate aspect that McDonald's has and not as global as McDonald's. And this is similar to Chipotle. I just have a lot of investments in the quick service restaurant space. So not really on my hit list to add a company like Wendy's, but we'll be looking at their results, see how they do, and maybe, hey, if I think the valuation gets attractive, I'll add it to a watch list or something, but it's currently not something that I'm looking to add. I just want to see their results. Yum is the same way. So Yum Brands, for those of you who don't know, own KFC, Taco Bell, Pizza Hut. So much more global business, similar to McDonald's. But this one is one that's actually traded sideways. I remember it being 125 over a year ago. Once again, pretty good valuation on it. And that's not a knock to these companies, by the way. McDonald's has a healthy valuation too. Just saying it's not necessarily an area I'm looking to expand and accelerate the exposure in my portfolio to these. It's just wanting to better understand how these companies are doing relative to the ones that I already own. And then lastly for Wednesday was Robinhood. So Robinhood, just interesting to, once again, probably on this list, there's not a company I have less interest in investing in than Robinhood. But I also find it interesting to look at their results just to get a sense of how retail investors are doing, if they're growing subscribers, losing subscribers, etc. So I could care less where the stock moves. I'm probably never going to own a stock like this for multiple reasons that we won't get into in this video. But I'm still interested to see their results, see how they're tracking. Similar to how I wanted to see SoFi last week without interest in buying it. This is one I just want to understand the space and if they're getting a lot more traction with younger investors, older investors, and what sound bites come out of the call to understand the investment landscape a bit more, particularly in the US. Okay, moving on to Thursday. So Thursday has some good ones. From consumer products, it's Kellogg's, it's PepsiCo, PayPal, Lyft is a competitor to Uber, Expedia. The big ones that I'm looking at out of this list is really PepsiCo and Expedia. So PepsiCo's been one of the most resilient stocks over, the last couple years. If we just go past 5 years here, look, very steadily growing 10% stock price a year, even going to kind of the peak, which I believe was, let's call it even summer 21 to now, they're up 15%. They were up even more than that. But no matter what time period, they really haven't had a big dip in any meaningful way. Their biggest dip was about 8% throughout this all. So it's just very resilient, very stable company, dividend payer, big market cap. This is one that I have owned in the past, but when I thought it got overvalued, I dumped it. It's obviously not a good decision in hindsight. But I'm interested just to see, as a CPG brand, how they say the consumer is doing, if they're having inflationary pressure. I think a stock like this is really hard to go up in a big way. The main things that would, the main catalyst that would make this stock go up, I assume, is them talking about a halt in inflationary cost of goods, halt in increase of production and transportation costs. Imagine if they say that their costs are actually decelerating. That'll probably make the stock move higher, especially because I think they said they took 17% pricing across their portfolio last year. So they're getting a lot more of a top line. So if their cost to provide that goes down, that may be enough of a margin enhancement driver to adjust Wall Street models to increase their valuation or their stock price. So I really see like limited upside, I'd say, in these kinds of names, just because they already trade at 25 times. They're already being priced in as being defensive and good to own in a recessionary climate. So I think they really have to impress to go up. So I don't think there'll be much movement on these guys, but I think there's probably more downside than upside, to be honest. I just do own some companies in the CPG space, so always interested to see what they do on their results and in key markets, US and abroad. Expedia is an interesting one. I have never owned Expedia, but I do own Airbnb for now as a smaller position. It's gone up a lot over the last month or so, but I still hold it. And this is one just getting a sense for overall anecdotal evidence of travel, if it's ramping up this year, how future bookings are doing, stuff like that, is something that I find will be helpful in some of my other investments that I do own. So that's kind of why I'm going to be taking a peek at Expedia throughout the month. And lastly, on Friday, I do own Fortis stock. So another big energy stock. Enbridge reporting Friday. Magna is a Canadian-based car parts company as well. But the one that I own and that I'll be looking at is Fortis. So Fortis trades almost like a bond. It's been relatively stable. Um, Actually down a bit. They primarily play in natural gas, paying out a 4% dividend. For those of you not familiar with the company, they've increased their dividend for decades and decades, usually about 5-6% a year. So it's kind of just like a bond that keeps growing its yield on cost over time for me. Very safe business, operates in the US, Canada, and the Caribbean. And like 90 to 95 percentile of their revenue is regulated revenue. So it's very stable. Usually their EPS and revenue comes in within 1 to 2% of expectations, just because it's all fixed pretty much. So I don't think Fortis will surprise me. They've never really surprised me on an earnings call. They kind of just flow with yield, like bond prices and cost of natural gas and stuff like that, over the short to medium term. And over the long term, they've actually performed pretty well. So, 5 years they've been growing their stock price 6 to 7% a year, and they've also been paying about a 4% dividend throughout that. So, getting about a 10-11% return over the last 5 years on my Fortis position. Don't really plan to sell any, and this is just being a steward of my portfolio, making sure I'm checking in on my companies as they report earnings. But I probably won't even bother listening to the call because it's usually nothing groundbreaking. I'll just look at the top line and see how they do. So yeah, that's kind of the companies that I'll be looking at for this week ahead. It's a really big week. It's an action-packed week. It's some other big names here, like Affirm, CVS, ATVI, BP, on and on. So let me know if you're looking at any other names this week. Those are the ones that I have. Thank you guys for tuning into this video. And please, if you haven't yet, subscribe to the channel. Would love to have you. I would love to hear from you guys. And please like the video if you like this type of content. See you guys in the next one.